Hello, Matthew. It's Tom Atkins, President and CEO of Mammoth Resources, and it's a TSX-V listed company. MTH is the symbol. And I was hoping to chat about a press release that we issued on Wednesday, July 13th, announcing the results of 4 additional drill holes of a program of 27 drill holes on our Teneriba project in the Sierra Madre of Mexico, a gold silver. Believe it'll be an open pit heap leach type deposit, where we had a almost 86-meter interval of 0.5 gram of gold per ton.
Tom, welcome back on the show. I really appreciate you coming back on. Look, I think it's tough times out there, and I think everyone's kind of going through the same pain at the same time. I'm intrigued as to how CEOs, boards are advancing their projects, or indeed if they're hunkering down. I see from the headlines this morning that you are getting on with things. 4 holes we want to talk about. But first, for us, we did a technical session last time out. We'll put the link below. Good session. But the thing you need to demonstrate to us and the market and to investors more broadly is that you were the significant size of this system. Were you able to demonstrate large and decent widths or not? And I guess this begins to answer that question, because your big issue is grade. This is a low-grade project, isn't it? Yeah, Matt.
What first thing I would say is the high sulfidation systems. This is really perfectly in line with that. I'll throw in an example in the Sierra Madre, Agnico Eagle, multi-billion-dollar market cap company. Their La India mine, they're mining a grade very similar to what is our weighted average grade of our over 50 drill holes. And so we're right in line with that. I'll throw another example. Team of people that I worked with when I was president and CEO of Castle Gold. They're now with Minero Alamos. They announced mid-June a financing for long lead time components of their project, equipment for their project. They're advancing a project, Cerro de Oro, that is grades 0.41 in an open pit heap leach. So we're actually 60% higher than that, our weighted average, and we're right in line with what's Agnico Eagle is mining economically, and have for years at La India. I want to point out one other thing too. When Agnico did their resource, they were using about a $1,400 an ounce gold price, whereas right now we're at $1,700, and only months ago we were at over $2,000. So it is an economical grade. The thing that I want to emphasize is the size. So Matt, I'm going to pull up a couple of slides that I think will help to illustrate the size and how we compare with these other high sulfidation deposits in the Sierra Madre, the same precious metal belt that we're in. So this first slide shows the size of the project, and this is in our press release. Each one of the grids that are illustrated there are 0.5 kilometer. And so west to east, it's over 4 kilometers of strike length, 4 kilometers, and it's open in both directions. There's 3 project areas: Moreno to the west, Masopari in the central area, and then Canaritos to the east. The Canaritos area is where we're really seeing some of our best results, and this is where this 86-meter interval came from. The grades are exactly in line with our over 700 chip samples, our channel samples. No surprises from us, really what we expected. The Canaritos area measures 1.4 kilometers by close to 0.5 kilometer in size. And I'd like to go to another slide. So this is our second slide, just shows some of the grades that we're getting from this program, where we've now announced 18 drill holes of a 27-hole program. And you'll see in the Canaritos area in this slide, there's that 86-meter interval of 0.47. There's a 46.5 of 0.5, a 43.5 of near 0.6. Masoparia, there's an 18 of 1.23 gram per ton gold. So we are getting some higher grade. This is what gives us this 0.66 weighted average grade we have over all of our drill holes right now. Again, comparable to what's being mined at Agnico Eagle's La India mine. And then the final slide, this is, I think, really interesting, because what I've done is I've scaled to the same scale as the Teneriba project. And so each one of the grids in this third slide that I'm showing is a kilometer square. And if you look at The El Sazel mine, this was a Glamis gold core mine. It's now depleted. At $300 an ounce, they had 19 million tons. They were 3.4 gram per ton gold, but again, $300 an ounce, not 17, 1800 that we have these days. They had a 1.8 million ounce deposit. It encapsulated about maybe 3/4 of a square kilometer of surface area. In the green in this slide, the La India mine, again, a sketch of their footprint. They've got close to 1 million ounces in reserves, over 1 million ounces in resources. Again, a similar about 0.7, about 3/4 of a square kilometer footprint. And then Mulatos, and this is a 3 million ounce deposit. Their resource calculated, or reserve calculated at 350 an ounce gold. They're about 1 square kilometer. So you look at all of those, and then you come to the areas where we're drilling. We're over 1 square kilometer, and we're similar grade as the La India mine. So we've got the size compared to these other assets that are owned by multi-billion-dollar companies, and we've got the grade that's comparable to, for example, La India. So like this is a good deposit. It's got the size. It will have the economies of scale as we define a resource and a reserve, and it moves into production because of the size of it.
Right, but tell me how you build this story out. It's like, thanks for those diagrams and the chart, helpful indeed. But how does a story like yours develop? Because if you're talking about the examples that you've given, they're going to be part of much bigger plays. So if these were just part of a much bigger production profile where they can bolt on a bunch of these things, it kind of, the economics, you can sort of start to see how they work. But what size do you need to demonstrate to say, do you know what, we've kind of got this big system here, we've shown that we've got the scale, we can mine this, or because of the nature of, or the constraints that you may come under in terms of the mineral system, you may have to flip this off to someone to bolt onto their portfolio of stuff. So how are you coming at this? Because you are going to become cash constrained at some point. You are going to have to get to market and raise some capital to kind of keep demonstrating the opportunity here. But how do you stay in control?
Yeah. So look at our next stage of the advancement. I had said that we'd like to do 50 drill holes. So we've done 27 of 50. So it's the rainy season right now in the Sierra. We tried to start in the rainy season last year because the prior 2 years it had been dry, and we really struggled. And they're having a really ferocious rainy season this year. So I'm glad we're not in the field. But our objective is to be back in the field late September, early October, and to do those other 25 drill holes and that. And so with that, I think we'll be very close to possibly able to do a maiden resource calculation. And what I would say is threshold. I mean, let me throw out the Minero Alamos. So they've got a 600,000 ounce deposit at 0.41. We're 60%. Our weighted average is 60% higher than what they're moving towards towards production. So we've got the grade. The one thing that's really great about open pit heap leach mines, open pit, I mean, you bring in a contractor for the mining equipment. The capital cost of a heap leach mine is actually extremely low. When I was at Castle Gold, our initial stage of advancement cost about 10 million. Those are dollars in the mid 2005-ish, 2007 period, but it was $10 million. We started off at 10 to 15,000 ounces a year. Within a year, we were ramping up to 35, and we were moving towards 75, 80,000 when we were bought by Argonaut Gold. And I came in at that at 39 cents, and we sold it at $1.20 in a year and a half. And we that quickly moved from 15,000 ounces a year towards looking at 80,000 ounces a year, and that's when Argonaut came in. So you can scale these things up for relatively low capital. You don't have to have huge economies of scale, because you just add more leach pad and you add more carbon tanks to extract the gold. That's a way of going about it. But look at, if it turned out that a big company saw the potential for a large deposit and we get bought out at a good price, then that's also good for our shareholders. But we're going to continue to drive it ourselves as well.
Okay, so in the past, we talked about your option projects, and you're quick to kill them if you don't think they can work. With a project like this, like here it's saying Minera Alamos, a company we know quite well, with Doug Ramshaw, open pit heap leach is cheap, the capex is cheap, and you can make some money. But even for them, that's one of three projects. So for you, this would be the beginning of something. Can this stand alone on its own 2 feet? Will you need to look at other projects, or would you look to raise the capital and develop this project on its own?
Yeah, well, look at on the raising capital side. I remember our first interview, Matt. It's like, you want a venture project, you got to raise the capital, and we did really well. I mean, we twice increased the size of our raise. And some will say, well, yeah, different market. And look at our timing at that time was terrific relative to the momentum in gold, and it was reflected in the price that we were able to finance in or at. But look, I've been with this company for 9 years, and if you go back the last 9 years, there's been some really tough times, and we've been able to keep it going. And where we sit right now, with the drill results we're getting right now, and the size that we're demonstrating, look, this is the best it's ever been for us on this project. Because if you go back in the past, it was, we had done partial geophysics, and we'd done a little bit of drilling. I mean, this big Canaritos area, we're getting these really good intervals, and that it's 1.4 kilometers by about half a kilometer. We had 3 drill holes in that previously. So there wasn't the kind of potential that we see now back then. I think this is a really exciting time for the company. I think it's a really exciting time for investors, especially given the share price right now. I mean, this is crazy. Matt, we're trading at about a third of how much we've invested in this project. Talking about not getting a premium, we're not even getting near the valuation of what we've actually spent on the project.
Yeah, but I don't think that's a kind of fair metric to go by. Lots of people lots of companies blow money because they get it wrong. I'm more interested in what do you know now versus what you knew a year ago, and what more do you need to do to be able to kind of paint that picture and say, do you know what, we can be a La India mine, we can be a El Sazal mine, we can be a Mulatos. That's what we're looking for. We're looking for you to complete that picture for us. So in terms of cash, how much more drilling can you do? In terms of needing to raise, when would you need to raise that, and how much to be able to kind of show us what you've got? Because I'm buying the low grade thing. Sorry, I was already there, but I wanted you to address that. I'm buying that you're seeing large intervals in a ever expanding system, but you kind of got to get over the line, haven't you? So what's the future look like?
Yeah, so look at the capital raise wouldn't be that significant. I mean, probably $1 million to $1.5 million. And to raise that amount of money, it's not a huge amount of dilution. And that would give us sufficient to do these additional 25 drill holes, bringing the total drill hole database to 75, 80 drill holes. And at that level, I think we would be near doing, if not able to do a maiden resource calculation. It certainly will show the potential, because most of those holes are going to go in that Canaritos area. Because we do have more holes in the central Masopari area and the Moreno area further to the west. It's got some copper. It's deeper in the system and also deeper in the topography, thus the mining sequencing. So that one's kind of, it's a future potential. So really our focus is going to be primarily in this Canaritos area. And again, this Canaritos area, given its dimensions, it is of the size of all of the reserves that were on Sazal, that are at La India, and that are at Mulatos right now, just this one area. So we have the size. That's where we're going to focus most of our drilling. And I'm confident, look, there's no reason to believe, if we're doing 200-meter step outs from other holes, there's no reason to believe that we can't go in and start to close off some of that area, still expand in others, get the same kind of 90% success ratio that we're getting in our drilling now, do the same thing and advance towards that maiden resource. And I believe it'll be a maiden resource that will show the potential to be economical, both in grade and in size. Okay.
So the question then comes down to the cost of that money. Obviously, at today's valuation, I'm putting you in the same boat as everyone else, but today's valuation, that's not cheap money. That would be expensive money.
No,
so
sure.
how do you play that? You've been around the block a bit, how do you play these dips? Can you wait it out? Your costs aren't exactly super high, but is it better to wait it out for you, or is it better to, go and raise the money and then demonstrate to people what you can do in terms of creating value with it?
Matt, the only thing I can really say about that is you got to test the market. Like, first off, it's the market right now. I don't know what's going to be better or worse in the fall. And we'll just have to see what the market's like at that time. And go to shareholders and say, look, here's the value proposition. But Matt, there's one thing I want to say on the value proposition. I was a former investment banker, whether it's that in my blood or just being frugal and that, because, we went through a lot of hard times. Like, there was a year and a half, we weren't accruing salary. We didn't pay anything, when times were really tough, in the sector with Mammoth. But the one thing I look at, I remember we got this 46.5 meter interval that we had announced in the last press release, about similar grade. And I looked at it and I just did a conservative, what's the resource from that hole? So, I extended it east and west of the hole. I didn't actually go north or south. I just kind of did it as a panel, even though this isn't a vein deposit that would be like a panel, but I just did it like it was a panel. And I said, okay, based on the grade, specific gravity, put some dimensions around it, how much gold could that contain? Because if there's not good leverage to it, then what the heck am I doing spending money on it? And so I did that, and I came up with about, at $1,800 gold, I came up with a value of that hole of about 700,000 ounces of gold. It cost us about $35,000 to drill. So if I can offer 20 times your money by putting these drill holes in based on the potential gold that's contained a result of that drilling, then that's what this is about. And if I can't, then I shouldn't be doing it. Like, we'll dump the project. It's not worth it. But the fact is, conservatively speaking, that's what I get when I look at all the holes. And I do that calculation when I look at this. So when I look at that 1.4 kilometers by about half a kilometer, and I look and say, okay, what kind of, dimensions do I need? I can conservatively see a lot of ounces there with only a small percentage of that area being mineralized. So that's the value proposition. And again, if you can't create that value proposition, then we shouldn't be in the business. But I do see that.
Okay. Next step is what? What do you do?
So we're advanced. There'll be some additional holes to be released. We're working on our technical report, which we'll post on our website. We're also doing some metallurgical testing. Carnaditos hasn't had any metallurgical testing to demonstrate what kind of recoveries we would get in a heap leach type setting. So we're putting all those pieces together as we move towards the early fall at the termination of the rainy season. And we can, and we would look to raise that additional $1 million to $1.5 million to do those additional 25 drill holes, which we believe we could complete before the end of this year. And then again, we think it will segue into a maiden mineral resource.